Hello, hello. Welcome again. Sorry, Mac, to hear you're not feeling well, so get well soon. Got to the charts a bit late this morning. Woke up late after a night shift. 8:30. So, news driver. Nothing really of interest in the minute. Following on from yesterday, we were talking about possible retracement, weren't we, of the dollar into this fair value gap. It was looking like it was going to take Friday's low, but looking on the 5-minute chart, it's in a balanced range at the minute, looking to break out either side. So, if the dollar's looking to drop down, we're looking for Nasdaq to go higher. It's yet to break the Friday's high. So we're just going to wait and see how things transpire. Nothing really much to report on, except the fact that there was a new week opening gap. It gapped higher. We can look on the 15-minute chart. So 2 white lines, that's denoting the new week opening gap. I've graded it. I would have liked to have seen it gap lower for it to then drop down into the new week opening gap and then start heading up into these relative equal highs that we were talking about yesterday. Looking to take this high at the moment. If we look at the 5-minute chart, we can see a new week opening gap. New day opening gap that it's reached. This blue line here is an older midnight opening first presented fair value gap. That lays within the new day opening gap, and also we can see as price ran up from this morning 7 o'clock, as it reached this high, large candle laid over the new week opening gap high and straight up and closed at the top. This is a volume imbalance laid within a 131 first presented fair value gap, and then we have obviously the midnight opening first presented fair value gap, and as you can see they're laying over each other, so that gives us a lot of multiple factors to work from. That tends to give a strong signal. So what's happened? Price has come back down into this gap, and right at the consequent encroachment of this opening range first value gap, it's had a big reaction, and price has gone to the upside. I think it's just taken this high, but just by a tick. So we're just going to watch it, and how would I like to see price move from now? Now that it's taken this high, we still have regular trading hours lows and highs still in play. If we pull up the midnight opening range Okay. So I'm having to look at things at the same time. It's quite difficult to talk whilst I'm concentrating. You need a lot of concentration to try and get up to speed. I hate waking up a bit too late. I feel like I'm playing catch up. So that's another reason why I wouldn't get into a trade if I'm feeling I'm rushed into getting into a trade. I don't like that feeling. I like to sort of sync up with what the market's doing first before I feel confident in taking a particular trade. I'm also having to work this OBS software and select the correct screens, so that's distracting me as well. That's something new I'm just trying to get used to. Like anything, once it becomes easy, you don't think about it so much. Okay, so that'll be okay. Here we go. So midnight opening range, 12 o'clock to 12:30. Mark out the highs and lows, and that's where that first presented fair value gap comes into play. Just here. High of the candle there, the low of the candle there. Oh, look at that. My mouse is playing up again. Like, god damn. Okay. So you'd run a fib from here to here. And then mark out the 50% and 100% standard deviation. So that's like a swing high. If you look at this bit here, if you were to swing it high like a door opening, I've reached 100%. And then you look at reactions that lay over the top of these lines for this sort of pre-market. Now that we've hit 8:30, I then tend to take all of these off and then just refer to the most recent, as you can see up here, the most recent first value gap after 12 o'clock. So, what do we have here? Price has just taken this high, created a low and a high. We could look at this as a possible breaker. So, high, low, higher high. If it was to come back down and to take this low, could it come back up? Maybe we might see some sort of, call it a PD array, so either what I like to look at, what I'm favourable with are fair value gaps, these gaps that we denote. If a fair value gap was to be presented in the top half of this run here, then that's a good way of looking to get an entry. Okay, so what I'm going to do is I'm going to stop the recording and then restart it, or when I edit it, that'll be where I would have possibly taken a trade nearer the time, because this is now what, 8:39. I'll be at the charts now until at least 10 past 11. So I'll stop it and restart it. So the next time you hear from me will be nearer the time something's happening, in the sense of a possible trade entry. Okay. So I think I said what was I said earlier. This could be a mini breaker. high, low, high, high, dropping down. The price action here is not great. There is a fair value gap up here with an order block. And then there's buy side above these swing highs here. Would I take a trade? Would I take a short? Not too sure. It is above the new day opening gap, so it could use the new day opening gap to continue going higher and maybe have a three spikes. Relates to the channel name, doesn't it? How clever am I? Could go up here and then retrace under and then look to short something around here. So there is a decoupling, albeit a very slight decoupling with, hang on a second, got the wrong chart up on the 5 minute, didn't realise that. No, lucky I saw that. There isn't a decoupling. I was looking at the S&P 500 index. Right, okay. $8.42. Be interesting to see what will transpire at the first macro. $8.50. Kind of respecting this new day opening gap, isn't it? You're seeing the bodies here, bodies here. Yeah, taking some liquidity up here. We've dropped down into it, but then the price action is becoming overlapping. Small volume imbalance. So pretty messy price action on the 1 minute. Looks a little bit cleaner on the 5. Look at this, let's look at the other time scales. Again, 2 minute, not much there. 3 minute. This should be a 4. 30-second, you know, it's labouring around, isn't it? $5-minute US dollar is going back into its balanced price range. If the dollar does drop, there is, regards to the Nasdaq, we do have a lot of PD arrays above the relative equal highs that I set out earlier. But first we need to break out. If we take those relative equal highs, I would then wait for it to at least pass up to the 75% range on grading the dealing range. So we are looking at, as I say, this is the relative equal highs. Got gaps here that have been unfilled on the upside. Interesting to note this relative equalizer right on the 50% halfway. So if it was to continue, I mean, taking a long is the likelihood of, it's less likely, how am I going to say this? If you take a long above the 50% range, it could come back on you. So ideally you want to take longs around the 25% range. And when we look at the 25% range, this gap and this low is laying over the top of it. And it's within a weekly fair value gap. So this is how I filter out having too many drawings. So for example, I've got all of the first presented fair value gaps coming off of the 931. If I was to select them all like this, you would then see them all populated. They're in red. See? So I put the most recent ones. I normally put the one that is nearest, lowest and highest to the current price. So that one's the lowest, that one's the highest, and that one lays over the top. So if that lays over the top, I take the biggest one. That one's higher up in that volume imbalance. So that's how I kind of filter out not having too many drawings. These lines are just sort of denoting, these vertical lines are just denoting the times, like 7 o'clock. It should be 9:30. The market open. This is really for when I do pre-market analysis, so I can take those off, clean up the charts somewhat. Okay, so drop lower. Let's see how this candle closes. If I look at the 5 minute, the open current price is within the 5 minute fair value gap. So now it's closed. Possibly have a look at the 30-second. Hit that low there, hit that low. A little wick on that. Could have taken a trade there. Let's have a look. So let's see how this one closes against this wick here. So if I put a trade on here, 29, I'd have to put it up here. So under a 9 pips. Pips is 4x. 9 ticks. What time is it? 1949, and now it's 50. So I take a little, typical. So I'm down the trade, 240. Stop loss. I really should think about. See, I should have taken it a little bit earlier. Okay, so now what I tend to do is I start panicking. I see price running, and I want to. Now it's taking a low. I'm going to bring it down halfway. Now what I'm going to do is I'm going to peel off, take some profit, see how things pan out. Because if I've taken profit, I've made $75 and there's $60 on a stop loss here. So if I get stopped out, at least I've covered my I'm trying to think whilst I'm talking, because you're now in the trade, things start to really overload your mind. Okay, so we want to see up close candles, support price. I can't help myself, but I always look at how much I'm making. I shouldn't do that. I specifically have percentages on here, so I can't see what the price is or the money that I'm making. So let's just see. I really should put my stop loss above there, but because I feel like I'm going to lose money now, I'm reluctant to, but I'm going to make myself do it. So 51. We're looking at the euro dollar. Euro dollar's looking a bit heavy, which isn't ideal. I want to see the dollar start to reverse to give this a bit more weakness. Okay. So it's just above 50%. This could spike for it and use the top side. How am I feeling? I'm feeling a little bit unsure. I really want to see this candle move down and take that low. We've got some gaps here. Feeling a little bit of heat. What's the gap that I put on here? It's not that big. It's only seven ticks. Would like to see this one take the low. 45 seconds left, so a lot of time left for this 1 minute to paint. I really want to see it start moving down. I told myself not to look at the price, but 75, no. Stop doing it. If I feel like that, what I should do is I should start peeling off another, shouldn't I? Didn't happen. I pressed it, it didn't happen. But now, look, see, it's starting to move. How am I feeling? I'm feeling it could come and take up this high. It's now into this gap. See, that's into this volume imbalance on the side here. Have a volume imbalance up here. Could take this swing high, so I'll leave my stop loss here. So Dow's looking heavier. S&P's the same. We've got 33 seconds left before the 5 minute fair value gap. I want to see on the 5 minute. Yeah, I can swap around here. Okay. Why is it? So this gap here between here and here. I want to see this candle paint below it when it closes in 10 seconds. It needs to be below this. If it isn't, then I'm going to start. Maybe take another micro off. No, it hasn't done. So I'm going to do what I say. Take another micro off. Okay. Produce a little gap here. Reach about halfway. And when you look at charts a lot, you get a feeling of how these candles are painting, how they move as in, are they moving sort of calmly, or they're jerking? So I like the movement at the minute. I really want to see these taken. We're still in this gap here. I like leaving this long line on with the price, because you can see where it is hitting exactly over on the left here. So I'm looking at this, and I'm also looking at this at the same time. So we've got a swing high wick, premium wick, in all this overlapping balanced price range. So if it does reach below here, then it is quite weak, because there's a lot of overlapping price action. So another 3 minutes before the 5-minute chart paints another candle. I want it to be below here, for me to feel a bit more confident that it's still going on the downside. See the way it's bouncing around here. There we go. Could this just be a quick... Where's it run down to? 5 minutes. So let's bring my stop loss to here. Just in that high. I told myself not to do it, but I have to look, don't I? I can't help myself. Okay, so it's coming to this. If you look from here to here, here to here, the actual candles. This is quite balanced. So if we do run through this, that means it's quite heavy, in my mind. I think I'm going to take. I'm feeling a bit anxious about. I'm going to take another one off. So this is our breaker. It dropped below the breaker here, and then came back up into this gap, which was this candle had laid over the new day opening gap, and it actually came from the top of the opening range gap. So that's why I got into that trade. It didn't reach this, so it indicated this 1 minute gap. So I was feeling like it could be quite heavy. 5 minute chart is now looking a bit stronger. No decoupling at the minute. We've come into this high here. This high here with an order block and 1 minute fair value gap. This could be the next target. It's just taken that low there, so I'm going to drop my stop loss to at least break even. And now I feel more comfortable on that volume imbalance there, just above it by a tick. That volume imbalance there. See that? The volume imbalance just go a little bit higher, because this also includes this gap here where this candle has come up to about halfway, again showing heaviness. Okay, so what's happened? We've dropped down. Oh, that's my actual alarm for waking up. Set it a bit late. But at the beginning, yesterday, I didn't really feel like I was going to trade. I didn't feel like there was going to be much to look at until later on in the day, because of the bank holiday and the other calendar sort of news drivers. Right, so could see like a retracement. Let's make sure we keep an eye on 50% range here, how this candle closes. I just eyeball it. Gosh, that's 50%. I'll leave my cursor there like that. You can see that's within this. So if you were to take half here to half here, you can see that it's pretty much half here as well. So confluence, as they call it, I think. So let's just see what happens. Can't help myself. I've got to stop doing it. See what sort of profit I've made. £100 or so. I could close it now and be happy with it, but I still feel like it's a bit heavy. I think I'm going to bring the stop loss down to that fair value gap high, and then if it stops me out, I'm going to be happy for the day. But I like what I'm seeing. As soon as we dropped out of this new day opening gap and into this fair value gap, price is looking pretty clean. So if it was to respect this, that means we're really on side for a nice drop down to maybe these lows here, relatively equal lows here. So here we go. Moment of truth. Well, not looking too good. 32 seconds. Enough time for it to close. And halfway. No, I think it's going to take that stop. Be happy that I've made that money. Okay. Right, so what I promised myself is, after getting into a trade, describe how my sort of dig into my psychology a bit more. I felt quite pleased about the trade. I made sure I started peeling off contracts as price moved in my direction. Because as I think I said to you before, what would happen is I would keep the 10 micros and I would just keep jamming up the stop loss. You know, would jam it up. On the 1 minute, I would always go for 2 candles above price. So if it went down here, I'd be up here, and then as it went painted this candle here, I'd come here, and then this candle here, I would have left the stop loss. So I would have taken it actually at the same place. If I jammed my stop loss up, I would have been stopped out here. Oh no, 2 candles would have been stopped out here. So if I'd had stuck with 10 micros, I would have made more money. But I'm trying to condition myself into taking profits. Yeah, because you could have quite easily come into this gap and order block here, as it reached here, in here, sorry, and then just come up and taken my stop. So I'll just carry on watching price for a little bit longer. But what I will do, because I started the recording just at the time of the trade that I took, I won't need to re-edit it. So I can just literally cut and paste it in and upload it. Sounded like the sound on the previous video, my first video, was pretty atrocious. It was, I think the microphone is cheap. I am tight. You know I'm tight. So there's some weird feedback, but hey, you know, it's not like loads of people are going to be listening to this anyway. It's purely for my own benefit. Hope you enjoyed that, Mac. A little bit of an insight to how I trade. How much would I have made? So 1847, $150 for a morning's work. So I'm going to stop it and I'm going to restart it because I'm going to let it record throughout the day, and then if I happen to see something of interest or take another trade, then I'll edit it. Okay, mate. Like I say, you get yourself better soon, and be safe and trade carefully.